From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for November 10th, 2016. In just a moment I'll be taking a look at the GBPUSD, the Great British Pound versus the US dollar for today's trade analysis. But first I want to recap a couple of the trade suggestions made over the past few days in the live trade room and in our analysis videos. First off, starting here on the NZDUSD, New Zealand dollar versus the US dollar. Of course, yesterday afternoon, 3 p.m. US Eastern Time, we had interest rate news out of New Zealand. The cut of interest rates, as expected, we initially saw the market pressure a little bit higher for the New Zealand dollar, but then once again turning around and going in the direction that we expected it to go. We discussed this in the live trade room yesterday. The break of the support level from yesterday, which was right around 7,300, gave way to the fall as expected. Currently sitting about 80 pips of profit in the trade. Let's take it down to the 4-hour time frame because this gives us a little bit better viewpoint of what's happened over the past several hours. In fact, I'm going to zoom in a little bit. This candle right here with the long wick on top happens to be during that interest rate news that we had at 3 p.m. Eastern U.S. time yesterday. You can see the spike higher all the way up into the 73.50s and then settling out after that news, holding out into the orange zone. Now, I said yesterday during the live trade room, if it broke through the orange zone or settled out within or broke through and they cut interest rates, it would be time to go short. And that's exactly what we've had going on. Of course, the next target will be the yellow zone all the way down into the 71.75 level if it can sustain the hold underneath this green shaded area. Of course, we're using the trade manager to protect profit at this point. Next, moving over to the USDCAD, the US dollar versus the Canadian dollar. This one's been a little bit tricky over the past couple of days. We did have an opportunity to look for a breakout above the 1.3420 level yesterday. It's been bouncing around inside that black box, top right-hand corner of the chart between the blue and the orange zone for several days. Of course, the big blue candle that cuts all the way up through that black box at the top right is on the election results that we had a couple of days ago. Let's go ahead and take it down to the 4-hour time frame again, and as we get down here to the 4-hour time frame again, you can see the push above a couple of days ago, the push above with the big election candle there. It slumped back down into the blue zone, settled down here into the blue zone, and you can see this little slope that started to happen. It came back down, we had a spike low, came back up, settled out into it, a little bit of a higher low, and now we can see the market pressuring back up as you would expect it to do from holding support at the blue shaded area. I'm currently sitting about 41 pips of profit on the trade from above the 34.20 level. I'm currently in at 1.3430, so in just a little bit above it, but continues to move higher here, and if it does, we'll look for it all the way back up into the 1.3500s as we go through our day today. We only have one single piece of news one high impact piece of news on the market for the day today. That's unemployment claims out of the U.S. So we'll want to watch that. But everything else listed as low to medium impact, and I would suspect we're looking for just continuation for many of these currency pairs as we go through our day. Okay, that's the two trades that I have open. Let's zip on over here to the GBPUSD, Great British Pound, US dollar. Nothing really has changed on this currency pair over the past couple of days, so I assume that the market is gearing up for something here. And what we've been looking for and talking about in the live trade room is a breakout of the yellow shaded area where the market has basically been in congestion. It's been consolidating, getting into congestion, and just kind of holding between the 2430 2385 level. So we got to wait for a breakout. That's really all there is to it. We have to see a real breakout. Now, this was not a breakout. It came back in. Yesterday, we saw it push underneath 2385. That was not a breakout. Came back in. We even saw yesterday a push above the yellow zone on this candle. Was once again a big blue candle and came back into the yellow zone. So what we need to look for here is a real deal, not a false breakout outside of this yellow shaded area. So how do we define that? Well, for me personally, and we speak about this all the time in the live trade room, for me personally, a real deal breakout outside a period of congestion, below a support, above a resistance, is a singular candle body that will open and close above or below that level. So what I'm looking for is a singular candle body that opens and closes above or below that yellow zone to increase my confidence in the continuation, either to go down towards the orange zone into the low 123s or to go up towards the green shaded area. Of course, if you're going to buy anything, you want to buy it at the lowest price. If you're going to sell anything, you want to sell it at the highest price. So once that breakout occurs, a little bit of a pullback will give you a better risk-reward ratio for your trade. Is it out of the question that we see this take another stab at the green shaded area? We've already seen two touches of the green zone, 25.10, 25.44. No, I don't think it's out of the question, especially if we get some poor unemployment claim data coming up here at 8:30 a.m. Eastern U.S. time, about an hour from now. If it's poor data, we might see the break of 24.30 and another challenge of that green zone, a third tap of that green zone, if you will. If it's all good news and we continue to see the dollar surge, in which we've seen across the board on the U.S. franc, the euro dollar, the USCAD pressuring higher now, the U.S. yen clearly has been pressuring higher. All of those pairs have been moving U.S. dollar positive. So if this GBPUSD catches up to that, U.S. dollar positive sends us underneath 23.85, especially if we're boosted by unemployment claims, and we look for it to go back down towards 23.20 for the GBPUSD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.